Can I triple my money with Block stock in 5 years? That's the topic of this video. Block stock is currently trading at about $63. So for me to do a 3x in 5 years, the stock has to be at about $190 in 5 years. In this video, I'm going to talk about Block stock recent price action. I'm going to talk about its business model. I will go over its financials, and finally I'll do a valuation to show the upside. Let's first look at Block's price action. In the past 1 year, the stock is down by about 25%. The main reason for this underperformance is shown on the screen. The revenue growth was almost non-existent between 2021 and 2022. And as you can see, the net income was negative $540 million. From a profit, their net income dropped to minus $540 million because the revenue stayed flat and their operating expenses skyrocketed. No wonder the stock has sold off. Now let's move on to the business model. Block, as you can see on the screen, have 5 different building blocks. We all know about Square and Cash App. They also do have 3 other segments. Spiral and TBD are Bitcoin related. Tidal has something to do with music. But for the purpose of valuation, I'm going to ignore Spiral, Tidal and TBD because Block do not report any separate revenue for these segments. So for now, they are additional bets that are not paying off yet. Let's quickly go over Square, which is their seller ecosystem. As you can see on the screen, they started as a point of sale solution to manage payments. After that, they have expanded to other services: payroll, invoices, appointments, e-commerce, Square Capital, Square Card, etc. So there is an ecosystem surrounding Square. Let's look at Cash App ecosystem. It started as a peer-to-peer money transfer system and it expanded to stocks, cash card, Bitcoin, direct deposit, etc. Recently, Block CEO said that they are creating ecosystem of ecosystems. So when he said that, he's referring to the seller ecosystem and Cash App ecosystem. A lot of us already know how Square and Cash App works, so I'm not going to spend any more time on those. Now let's move on to the financials. The stock price currently is about $63. The market cap is about $38 billion. With respect to revenue, Block reports their revenue in 4 different segments. As you can see on the screen, we have transaction-based revenue, subscription and services-based revenue, hardware revenue, and Bitcoin revenue. Hardware revenue and Bitcoin revenue are straightforward. The transaction-based revenue comes from both Cash App and Square, but as you can see on the screen, predominantly the transaction-based revenue comes from Square. And the subscription and services-based revenue also come from both Cash App and Square, but predominantly the revenue comes from Cash App. Now that we understand these different revenue segments, let's look at their gross margins. As you can see on the screen, the transaction-based revenue, I've shown it in green line. They made about $3 billion of revenue in the 6 months ended on June 30th. The gross margin is 42%, which is good. And look at the subscription and services-based revenue. Predominantly, this money comes from Cash App, right? So that's about 80% gross margin. They made close to $2.8 billion of revenue and the costs are only $543 million. So the gross margin is 80%, which is very impressive. Now let's look at the hardware revenue. The number is very less compared to the other revenue segments. Square pretty much gives their hardware for negative gross margin, which makes sense. A lot of companies in this sector, they just give the hardware for free and make money out of it with the transactions. So for the purpose of this valuation, I'm going to ignore the hardware revenue. And then let's look at Bitcoin revenue. It's very strange that they report Bitcoin revenue because as you can see on the screen, for the 6 months ended on June 30th, they're reporting $4.5 billion of Bitcoin revenue. And look at the cost. That's $4.46 billion. So that's 2% gross margin, which is negligible. It seems like this is just the transaction cost, but subject to correction. But I don't like the way they report this revenue. It actually misleads. For example, for the 6 months ended on June 30th, the total net revenue is shown as $10.5 billion, but that's not very real. You have to deduct this Bitcoin revenue of $4.5 billion. So in reality, they only made about $5.5 billion of revenue. So adding this Bitcoin revenue is misleading, but it is what it is. Since the gross margin for this Bitcoin revenue is 2%, I'm just going to ignore it for the purpose of valuation. When you consider the magnitude of this gross profit coming from Bitcoin revenue, it is negligible compared to the gross profit that they get from the other segments. So I'm going to neglect that as well when I do the valuation. Let's quickly look at the growth rate in the past 6 months. As you can see on the screen, the transaction-based revenue, predominantly coming from Square, only increased by about 10%. And the subscription and services-based revenue, predominantly coming from Cash App, increased by about 40%. That's very impressive. Let's now look at the latest quarter results. As you can see on the screen, the net revenue was about $5.5 billion, which includes about $2.4 billion of Bitcoin revenue. Like I said, it is misleading. The real revenue would be about $3 billion in the most recent quarter. The gross profit was about $1.8 billion. Look at the general and administrative expense. It's standing at about $549 million. A year ago, it was at $395 million. So that's a significant increase in the operating expense. But when you look into the revenue, it did not grow much compared to a year ago. So obviously we will expect a loss. The operating loss is about $132 million. So Block is not making profit because their operating expenses are very high. And look at the weighted average shares diluted. That's about 606 million. A year ago, they had 581 million outstanding shares. So that's almost 3 to 4% dilution, which is significant. Quickly look at their balance sheet. They have about $6 billion of cash equivalents, and short-term investments. Total current assets are about $15.8 billion, and the total current liabilities are about $8.2 billion. So there's a difference of about $7 billion. So I can definitely give credit to this cash equivalents, and short-term debt securities of about $6 billion. So that is good. The balance sheet is good. Before I move on to the valuation, let me show you their stock-based compensation. As you can see on the screen, for the 6 months ended on June 30th of 2023, it stands at about $600 million. The real revenue for the past 6 months, excluding the Bitcoin revenue, is about $5 billion. So almost 12% of their revenue is going towards stock-based compensation. That is high, and that is one of the reasons the number of outstanding shares are increasing and hurting the shareholders. Let me now move on to the valuation, which is the more interesting part. As I said before, I'm going to ignore the hardware revenue and the Bitcoin revenue for the reasons I stated before. It leaves me with two other revenue segments. One is the transactions revenue, and the other one is the subscriber and services revenue. As I said before, transactions, majority of the revenue is coming from Square. Subscription and services, majority of the revenue is coming from Cash App. So let's value the transactions business first, also known as Square. In 2023, they are on track to make about $6 billion of revenue. As I've shown before, they made close to $3 billion in the first 6 months of this year. So they're on track to get to about $6 billion. With reference to the estimated growth rate, I'm assuming 10% growth rate year over year for the next 5 years. Remember that in the most recent 6 months period, they grew their revenue by about 10%. But we know that the current macroeconomic environment is very challenging for small businesses that use Square. And once their high interest rates come down, the small businesses should do much better, and they should use Square ecosystem more, resulting in an acceleration of this revenue growth. But I'm just being conservative and putting this 10% revenue growth rate year over year, with which they can make about $8.8 billion of revenue in 2027 with transactions business. With respect to net profit margin, I'm assuming 12.5% because their current gross margins are about 40%. For a company with 40% gross margin, they can easily achieve 12.5% net profit margin if they are disciplined with the operating expenses. Currently, Jack Dorsey as the CEO is not very investor friendly, but I'm assuming that in the coming years and quarters, either he steps aside or be more investor friendly and control those operating expenses to get us 12.5% net profit margin. With that, the net income in 2027 would be about $1.1 billion for the transaction business. Since the transaction business is growing in the double digits and has a 12.5% net profit margin, I can assign it a cash cow multiple of about 15, with which this transaction business would be worth about $16 billion in 2027. With respect to the number of outstanding shares, currently they have about 606 million, as I have shown in my previous screenshots. I'm assuming 4% dilution. They're continuing to give out a lot of stock-based compensation and making a loss, right? So we can assume dilution. 4% I think is actually on the conservative side. They may dilute us less, but I'm not going to take chances with this CEO. So I'm going to assume 4% dilution, with which the number of shares in 2027 would be about 709 million. I divide the $16 billion of market cap with 709 million outstanding shares. I get a stock price of $23 for the transactions business. Now let's value the subscription and services revenue segments. Predominantly this money comes from the Cash App, like I said before. In 2023, they are on track to make about $6 billion from this subscription and services. Remember that for the 6 months ended on June 30th, they made about $2.8 billion of revenue, which represented almost 40% year-over-year growth, right? So $6 billion from this subscription and services business is reasonable this year. They grew 40% in the past 6 months, right? But as they grow bigger and bigger, the revenue growth has to stall. Cash App has an ecosystem and it can probably grow faster, but I'm being reasonable and assuming only 20% revenue growth, with which they can make about $12 billion of revenue in 2027 from the subscription and services business. The gross margin is 80%, so they can easily make 30% net profit margins if they are disciplined with their operating expenses, like I said before. With that, they can make close to $3.7 billion of net income in 2027 with the subscription and services business. For a company that has 20% year-over-year growth rate and 30% net profit margin and also has a long runway for growth, I can assign a premium multiple of 30, with which the market cap would be about $112 billion in 2027 for the subscription and services business. When I divide this $112 billion with 709 outstanding shares, the stock price in 2027 would be about $158 for subscription and services business. Now let me put these two things together. The stock price for Block in 2027 would be about $181. $23 is coming from the transactions business, $158 coming from the subs and services business. Currently they're at $63.5, right? So that's about 185% gain in 5 years. They currently have about $6 billion of cash equivalents, and securities, right? So I'm not even considering that. If I consider that, that's going to add another $10. So in a way, we're getting to about $181 from current stock price of $63 in 5 years. Therefore, I believe that a 3x is possible for Block's stock in the next 5 years. Of course, for this to happen, all my assumptions of growth rates, profit margins have to be valid in 2027. Currently, we do not have an investor-friendly management or a CEO, so we hope that it's going to change in the coming quarters or even years. Since I'm hoping that things will change, this becomes a high-risk, high-reward stock for me. In full disclosure, I do own Block stock. In one of the accounts, the average cost is about $59. In the other account, the average cost is about $85. In conclusion, I see Block as a high-risk, high-reward stock, and I definitely see a chance of it doing a 3x in the coming 5 years. Having said that, this is a high-risk, high-reward stock, so I have to be very careful with the position that I build up in this Block stock, because I have to be prepared to lose all of my money if things go wrong, and be prepared for the 3x if things go right. Let me know your thoughts in the comments. Thank you so much for watching.